Okay, so this is just like a case study for me to review for myself. I may add this to my channel a little later, but it's currently nighttime right now. I'm not looking for a trade right now. I'm just going over what happened today, September 22nd, as you can see. So, like I said before, this is a downtrend, which is what I primarily look for. I look for an actual trend. It doesn't have to be a downtrend, it can be an uptrend. But the things I want to see is I first want to see price doing a corrective movement, which it did here. The main two things I want to see, the main three things I want to see is is there a trend? Is there corrective movement or price action? Is there a break of structure? Because the way I trade, the way I feel comfortable trading, is there a break of structure in the continuation of price? Okay. So these are the main things I look for. Make it a little larger. Cool. Bring that bad boy. Oh, I can't adjust it. Okay, cool. So first and foremost, I do see a trend, and a good way to analyze if this is an actual trend is you can see the swing lows and swing highs, but you can also see that there's volume on these swing lows, which I'll go ahead and make it blue. So that tells me that we're for sure having bearish movement. This is a bearish market. Each of these swing lows has broken structure. This is just an extra confluence of how to go with the market. Where's that tool where I can copy it again? Okay, let me just right click it then. Clone, there we go. Yeah, it's kind of hard to pick up. Break of structure. I want to see candle closes, candle closures. Break of structure, break of structure, break of structure, and so on and so forth. So when I see this type of activity, this type of price action, it's telling me that there's a strong seller's market. The market wants to sell. So when I have these confluences, as well as my main three items that I'm looking for, it gives me a chance to really analyze what I have. Now, what's interesting about this particular example is right around this area. What happened here? So we see this corrective movement right here, or this retracement, because we already identified the trend. Now, the interesting thing that I'm starting to realize is you really want to get a full closure of structure. Now, price did break structure of this uptrend right here, of this retracement, and we can annotate that right over here. We'll just make this a little larger just for the sake of the video. But the thing is, price wasn't strong enough to break this structure point. Price could not trade, close, or stay in this region. So this, in my mind, tells me that it's invalid. It doesn't always happen that way, but it's more than likely invalid. Why? Because it completely ignored the most important rule. I wish I could highlight it, but TradingView doesn't allow me to do that. Number 3, both of these are important. But if I don't have this to me would just be another demand. It is. But what it also is, it's a liquidity grab. Why? Because there are traders out there, big institutions or retail traders, who realized this push up, which they didn't know was a retracement. And they thought price would come back down here and shoot up. Now it did for a split second, but then it continued to break structure, as you can see. Now, this also could be known as equal lows. So what I'm going to do is I'm going to put break of structure. Actually, what I'm going to do is, this is an invalid break of structure. So because of that, I'm going to go ahead and change this to equal lows. Why? Because this is an area of liquidity. There are stop losses here. There are sell orders here. So there's a lot of liquidity here. As you can see, price shot back up. We're going to get there. But since I don't have that break of structure in this region, this is invalid. This whole area is invalid. This continuation right here is invalid. But what's valid is this movement. Now I went ahead and notated this as well, because here's where it gets interesting. I'm starting to realize that when you see equal highs during a continuation, price more than likely is going to react from what sponsored the entire movement. I'll say it again. If there are, we'll just say supply areas, supplier demand zones, within continuation or determining, whatever, determining trend, price more than likely will revisit. Oh dear, it's just the eye that's messing up. Will revisit. Oh, it is the eye, isn't it? Okay. The order block that sponsored the break of structure. I really need a, yeah, we'll text wrap that. Oh my God. There we go. So because I see these equal highs, this is telling me that there's, just like how there's liquidity in this region, it's telling me there's liquidity in this region as well. Hmm. Now, when I see this type of activity, I'm no longer focused on this buy before you sell. It looked good, but look what happened right after this candle. It took me out. It took me right out if I were to be in this trade. But what I see is it wicked up. These wicks are very important. When you see wicks, that's letting you know there's a lot of liquidity in this area. There's a lot of people, a lot of orders in this area. So this is the real order block, the real order region. This move, these two moves was sponsored by this region right here. So what I can do is I can actually delete this and just move this up because I've already done my analysis. Let's review the rules. Is there a trend? Yes, and we kind of confirmed the trend with the type of volume we're seeing from the breaks of structure, from the swing lows, from these nice swing lows right here. Swing low, swing low, swing low. This is what I like to see. Is there corrective price action right over here in current time? Excuse me. Now we can go to a lower time frame to also give us a little more confluence as to why it would make more sense to use the sponsored order block versus the most recent order block. This would be the most recent order block. So let's go down to maybe the 5 minute. So on the 5 minute, you see a trend within a trend. So there's an uptrend on the 5 minute as well as there's an uptrend within that H1 or whichever higher time frame retracement. So what you can tell yourself is what sponsored the break of this structure point right here, because this was the last structure point on the 5 minute. Or you could say this really was right over here. So what area sponsored that? It'd be this buy before you sell, because not only did this momentum break structure here, it also broke a momentum trend line, which is not that important, but it just gives you that much more confluence, right? So this buy before you sell broke a trend line, and it also broke the M5 structure. So that lets me know that this is probably the most probable region of where price more than likely will revisit. There isn't really much of an imbalance, but there's volume. There's volume. There's volume after the break of all this consolidation. This was just, this right here was distribution. This was a distribution. So if we know this was a distribution with breaks of structure, which sponsored this downtrend, what would make more sense? It makes sense to place your trade in this region, as well as liquidity above this region. So what you can do is you can have a sell limit. Just put your stop loss above the wicks. Maybe do like 7 pips, right? And what also lets me know that price wants to revisit that area is a type of volume I'm getting after the breaker structure. I'm getting a lot of bullish volume, a rally base rally. So this is a rally base rally. I like to see rally base rallies. And we get another retracement, minor times frame retracement. It mitigates its order block. It mitigates these imbalances and it wants to go up. So that's another confluence. But this trade opened up around, this was around, I believe, 3 p.m. or 5 p.m. I'm not sure. I think it was 3 p.m. If you had a 6 pip stop loss, your trade would have gone to hell. This is, dear, I don't even know. I don't even know what this is, but it just melted. The risk to reward on this is crazy. Let's go ahead and say it was 10 pips. This is a 1 to 8. A 1 to 8. Your TP would be past this structure point. So that's really what it is, guys. Feel free to revisit this video. I will. In fact, I'm going to re-add my notes because I'm going to study this later. But make it make sense. Make it make sense. Um, for all my traders out there who are looking to do the FTMO challenge, find something that makes sense like this. You don't have to trade like this, but if you're going to trade with the trend, make it your friend. Have some rules for yourself. Make it make sense. Alrighty, that's all, folks, for tonight.